with insurance, what you're, fundamentally doing is you're going to a trucking company sometime, second, third generation, and you're asking them, hey, hire us to come manage one of your top 3 largest expenses, right? And as bright-eyed, bushy-tail, kid out of college, you don't really have the credibility that, people that have been in the industry for a long time have. So it's about building that credibility, understanding how do the trucking companies operate, how do they make money, what impacts their business and their bottom line, understanding the insurance side of things, what coverages are out there and how do you best structure those to make sure you're protecting those trucking companies.
Welcome to Beyond the Bulldog, presented by Mack Trucks. I'm your host, Brian Wright. What you can expect from Beyond the Bulldog is to learn, enjoy, and participate from the comfort of your seat, whether on the road or off. You'll engage in topics and stories from people that work throughout the trucking industry. This is mile marker 25. Today's conversation is with Jared Sweeney, Vice President, Transportation Group with Cottingham and Butler. In this podcast, you'll learn about the trucking insurance industry, some of the challenges with increasing premiums, and solutions that companies can adopt to mitigate risk.
You're listening to Beyond the Bulldog, presented by Mack Trucks.
We are here with Jared Sweeney. He is Vice President, Transportation Group with Cottingham and Butler. Thanks for joining us today.
Yeah, well, I appreciate having me. It's a pleasure to be here.
Yeah, so let's talk about insurance, your company, and kind of how you found your way to Cottingham and Butler.
Yeah, it's a good question. I'm not sure I still know the answer to it because nobody, I think, wakes up or wants to get into insurance, out of college. But I was at a state school in Wisconsin, one of the many state schools, University of Wisconsin-Eau Claire, and Cottingham and Butler came on campus and got exposed to really the insurance industry overall, but Cottingham and Butler. They were out of a town of 60,000 people on the banks of the Mississippi River in Dubuque, Iowa. Had never been there before, so I said, what the heck, let's go do an internship down there. Surrounding yourself with the people there, just the culture and everything that they stand for and the values, I was just really drawn to it. And then started there out of college, and it's been over 9 years now and haven't left, so it's been working so far.
First job out of college too, right?
Yeah.
So what was your degree?
Marketing professional sales.
Gotcha.
Yeah.
Perfect. Well, that goes hand in hand with insurance.
It does, yeah. You use the insurance side of it a little bit more than the sales side most days, but it does.
Did you grow up in Wisconsin side or where Cottingham and Butler is? How does all that work?
Good question. So I've jumped around from 3 states within the upper Midwest. I grew up in southeastern Minnesota. I always tell people it's by La Crosse, Wisconsin, because that's more notable than the small town of La Crescent, Minnesota. But grew up in southeastern Minnesota, town of about 5,000 people. Went to school in Wisconsin and then moved down to northeast Iowa after graduation.
What was your first role with Cottingham and Butler?
So in insurance agencies overall in Cottingham and Butler, they're relatively horizontal organizations. There's not a lot of, climbing the corporate ladder, so to speak. So I started off doing exactly what I do today as a truck insurance agent. Okay. And then the evolution within Cottingham and Butler is you typically start off calling on smaller carriers. There's more of them out there. They need a lot of help like everybody else does. And then you continue to swim upstream and just evolve your client base over the years. And now I'm still doing fundamentally the same thing I was doing. I also manage a sales team of about 7 different agents that are getting their career started too.
Yeah. What was the biggest challenge going from college to the real world? Now you're in insurance, right?
Yeah, I think you're drinking out of a fire hose. When you start your career. With insurance, what you're fundamentally doing is you're going to a trucking company sometime, second, third generation, and you're asking them, hey, hire us to come manage one of your top 3 largest expenses, right? And as bright-eyed, bushy-tail, kid out of college, you don't really have the credibility that, people that have been in the industry for a long time have. So it's about building that credibility, understanding how do the trucking companies operate, how do they make money, what impacts their business and their bottom line, understanding the insurance side of things, what coverages are out there and how do you best structure those to make sure you're protecting those trucking companies, and then understanding, what's the value proposition of Cottingham and Butler. So you're really trying to learn those 3 pillars all at the same time while walking into the office of a trucking company and sitting down with, 50-year-old business owner, for example, and saying, hey, hire me to come manage this expense for you. So it was a challenge.
Well, apparently you're doing something right because this conversation was made possible by one of our other podcasts. Yeah. It was Richard over at JL Rothrock.
Yeah.
In a sense, what does Cottingham and Butler do?
Yeah, so it's funny because I remember interning and just trying to figure out sort of, I call it, the supply chain of how insurance is purchased from the end user. It's complicated, and it's complicated in truck insurance. I think it's hard for people to delineate how it differs with commercial and especially commercial auto versus how it compares to your personal lines, right? Because we're all used to, 15 minutes can save you 15%. Go online, you can get 7, 8, 9 bids on your home and auto insurance, and there's never really a problem buying insurance, right? Well, in the transportation world, we're what we call an independent broker. So we don't work for any one particular insurance company. We represent a slew of 60, 70 different insurance companies across the industry that all write different lines of coverage. From there, then, we are essentially buying insurance on behalf of the trucking company. So Mr. Motor Carrier, like the one you mentioned previously, they say, hey, Cottingham and Butler, we're going to hire you to go shop our insurance and manage it for us. And then we've got the relationships and the ability to go within our network of insurance companies to help negotiate the best deal, the best coverage, bring the options to the table, and then ultimately, place the policy with whichever one, comes to the table that year. So we're the broker, the middle person in that supply chain.
Yeah. What is your day-to-day? Is it talking with customers? Is it managing the salespeople? Is it dealing directly with the insurance companies, or all of it?
Yeah, it's all of it. Yeah, and that's, I guess, what sort of the cliches, that every day is a little bit different, but it truly is. I mean, it's a mixture of, first and foremost, managing your current customer base, and as an agent, you have your book of business of your client base, and you're really the quarterback of those accounts. We've got a phenomenal service team that does a lot of the hard stuff that I'm not doing, but you're there to manage the relationship and make sure that everything is working the way that you said it was going to work. Some days that takes up all your time. Some days it takes up slightly less of your time. But then the other side of it is, trying to be on the side of going out and finding other trucking companies that need help, and trying to figure out, who's out there who needs help and who can we, try to bring on as a new client.
And trucking industry is a word of mouth relationship business. We were just talking about another person who provided some Snickers and M&Ms, and you happen to know, who she was. So I would imagine finding new business is a lot about the relationships, word of mouth, and kind of expanding through the web too, right?
Yeah, you're exactly right. And I think that was one of the probably more eye-opening things too. And I got into this business as you're selling a promise, right? And at the end of the day, we're not selling anything tangible. So it's really hard to walk into the office of a trucking company and try to explain, hey, you can't touch and feel what it is that we're going to bring to the table, but you got to have some trust and some faith in the fact that we're going to out hustle whoever you're currently with and try to bring more value to the table. So in doing that, your reputation and your word is everything. And the minute you get that reputation in the marketplace that, hey, they're coming in and selling us a bag of goods and they're not following through on their promises, it's really quick for that word to get around in a negative way. So on the flip side of that, to what you had said, building that brand and that reputation, that somebody that is really working in the best interest of the client and putting their interest first, that gets around. And I'm not going to say it gets easy because it's not, but having that reputation surely helps.
Interesting that you talked about trust. With an intangible product, trucking delivers things, but really at the end of the day, it's a service.
Yeah.
I'm going to promise that I'm going to get from point A to point B with whatever you need and be on time and at a reasonable rate and stuff like that. How do you develop that trust, especially out the door trying to find new business, something that trucking industry can also pick up?
Yeah. That's a really good question, and it's a big question because I think it all starts first with you've got to have the confidence and you've got to have the expertise in yourself that I feel confident with what I'm going to deliver to the trucking company. What I mean by that is, if you were coming out of college trying to do this role and you're in an organization that doesn't really give the support and they try to get you as licensed as quickly as possible in insurance and then want you to go, start pounding the pavement and, selling policies, right? It's hard because you don't know what you're doing. So I think first and foremost, it's being able to go talk with those motor carriers that, hey, Cottingham and Butler's been doing this since 1887. We've been doing insurance for that long. Yeah. We've been doing insurance forever. There's a lot of people that have come before me that have paved the way to what really great outcomes look like for trucking companies. And it's not just me doing this on my own. It's me leveraging, some of the individuals that have been at Cottingham for, 25, 30 years that have been doing this, that are there to help you along the way. And it's having that confidence that we know what we're doing and we're going to be able to deliver on what it is that we say we're going to do. And without that confidence, to your point, it's a very challenging, product that you're trying to sell, and you need to have that, support in the back end.
Today we highlight Project K9 Hero and their mission to serve those who protected our families, our communities, and our America. Project K9 Hero works to ensure the best quality of life for our nation's retired police and military working canines. by providing assistance with medical costs, prescription food, rehabilitation, rehoming, and end-of-duty services. Since 2016, Project K9 Hero has cared for and supported over 350 retired service dogs, honoring their life-saving work and allowing them to live their best lives after serving our country. And now, Project K9 Hero is embarking on a new campaign to build a rehabilitation and rehoming center to help even more dogs after their military and police service. To learn more and to show your love to these American heroes, visit projectk9hero.org. That's project, the letter K, the number 9, hero.org. Join us as we support these canine heroes who have given so much to America. We are here with Jared Sweeney, Vice President, Transportation Group with Cottingham and Butler. You just recently had a summit, right?
Yeah.
So what is the summit? What do you guys offer? What is involved in all of that?
No, it's a great question. So it's our annual Cottingham and Butler Transportation Summit. We've been doing it for probably over a decade now. And really what it is we always tell the motor carriers that this is a 2-day event for you to step away from your business. And instead of working in the business, take 2 days away to go work on the business. It has nothing to do with selling insurance. It has nothing to do with Cottingham and Butler. It's really trying to bring the best industry thought partners to the table and get them in a room for 2 days with the trucking company, C-suite executives and owners, just to round table and talk about the biggest challenges and hot topics going on in the industry. Trucking companies would probably agree too. You can almost make it a full-time job going to a bunch of different industry events. But I mean, we continuously get told from the trucking companies that it's the best event with the best content that they attend every year, because it's all about bringing good content to the trucking companies so that they've got deliverables that they can take back and implement into their business.
Yeah, I was working with a company that had, I think it was around 113 different locations throughout North America. And we're all running our own businesses, but we're all a federation.
Yeah.
So we would create these business groups where we would pay into it. We'd have kind of a moderator come in, and we'd talk about financials, successes, failures, and all of that, because what we're experiencing in ours might be different than what someone else is experiencing. And you're able to leverage that to get better and better and better. So it sounds like this is very similar to what that is.
It is, yeah. And the other byproduct of the event is not just the content, but it is that networking opportunity. And you see so many relationships that are built out of that, where, you get 2 trucking companies from different sides of the country that, meet each other. They're going through the same challenges, and they're able to leverage, the knowledge base to go help better them. And obviously a lot of the state trucking associations do a great job of facilitating, that, thought sharing as well.
Was there a main theme this year?
The theme is really, it's all about just, sort of what Cottingham Butler's motto is, just better every day. Just, How can you, focus on, with so many problems, so many big things going on, and trucking companies going through a lot of challenges right now, how can you just, try to, slowly but surely just get better every day? That's always been really the theme behind the event.
Yeah. Let's talk insurance.
Yeah.
All right. What is insurance, and why do trucking companies need it?
Yeah, it's a big question. I could probably spend all day talking about it. I think on a high level, insurance is, a way to manage risk, right? So you think about any business or, on your personal level, you've got obviously, risk that, somewhat is predictable and somewhat's not predictable. But in the event of a catastrophic event that you don't have the ability to cash flow out of pocket to go take care of, you need an insurance policy that's ultimately going to step in and, take care of that financial burden for you. And that's what insurance is, fundamentally. For trucking companies, it's a little bit of both. First and foremost, they're federally mandated that they've got to carry insurance. So every truck going down the road has to have a minimum of $750,000 of commercial auto liability coverage, where $1 million of coverage is really the standard, right? A lot of trucking companies choose to buy additional excess limits above that to protect them in the event of a bad accident. But the federal regulation or requirement is, I guess, the first tenet of it right there. The other side of it is that trucking companies, they've got a lot of valuable, equipment going down the road. So they've got to insure that equipment in the event of an accident. They've got to insure the injury, of any potential injury to a worker that takes place. And those are just probably the 3 biggest, coverages right there. And then there's, the cargo and the trailers that they're insuring. So everywhere you really look with trucking companies, there's risk, right? And I always say, I firmly believe there's probably no other industry out there that spends as much on insurance as a percentage of revenue as what trucking companies do. So it's, one of their top, 3-4 largest expenses on their P&L every year. So I mean, it's a big deal for them.
What types of insurance? Obviously, it's for truck,
Yep.
the cargo and things like that. Do you also cover the business side of it itself?
Yeah. Yeah, so Cottingham and Butler is really a one-stop shop with it. So we do any insurance policy that a trucking company could possibly need, I mean, we're able to provide, and we do provide. And then we even have a whole subset of our business that all that they do is health insurance for trucking companies, which is also another topic that I'm not as well versed in, but is a big challenge and thorn in the side for a lot of motor carriers. So really anything that a trucking company could buy, from that commercial auto liability if they injure or damage somebody else's property, comp and collision on their own equipment, work comp on their employees if they have independent contractors, there are a whole subset of additional coverages there, the cargo insurance, the property on their buildings, really cradle to grave.
How has it changed over the years?
Well, I've been doing this a whopping, 9 going on 10 years. I feel like it's changed dramatically, but I always get reminded that, I wasn't here in 2008 and all of the other, recessionary periods we've had. It's changed a lot, though. And I don't want to get on a soapbox here going on sort of down a rabbit hole, but I don't think that I had an appreciation for it, nor do, just the average person on, how much goes in to just a trucking company securing insurance in general, not to mention competitive, but just getting insurance to keep those trucks moving down the road. And, I grew up, my dad was a truck driver. So, in the summers in, elementary school, high school, I'd be riding with him, helping him, strap tarp loads. So I always had a great appreciation for just how much work goes into operating, a truck and a trucking company. Yeah. So when I stepped into this role, I'm like, hey, if I can, help add value from the insurance side, that's my number one goal, right? But you're sort of shocked at first of, how expensive the insurance is, how hard it is for a lot of these trucking companies to secure it, and just how volatile it is, where they don't know from year to year, or, am I going to get a flat renewal, a 10% reduction, or my rate's going to go up 50%? I mean, it's just, there's a little bit of roll in the dice there. And I think what has created a lot of that is, there's a high propensity to really bad accidents. And when you've got an insurance company, they're in the business of making money too. So what are they collecting in premium versus what are they paying out in claims? And is it profitable for them? Right. So I say all of that because it's a very complicated process to buy the insurance. And you feel a little bit at times like you're sort of walking on eggshells where you're just trying to go secure policies. But I think at the end of the day, the costs have continued to rise with it, and it's an ongoing battle for motor carriers. Yeah, and let's talk a little bit more about the carrier side. Yeah, to be able to provide coverage and make money, you can get essentially a cut rate deal from a company that may not be planning properly, and with one big settlement, they might be strapping their reserves to provide insurance coverage for others. So you want to find a company that's solid and reputable, while still managing the cost. So let's talk a little bit behind the scenes from the insurance carriers as far as, okay, we're going to provide insurance for the trucking industry. How do you plan it? How do you set it up and still be, relevant and cost effective? Yeah. And I think where the focus I'll put on it is all going to be around the commercial auto liability. The other lines of coverage, not to dismiss them, there's a little bit more capacity for those. They're a little bit easier for insurance companies to price and I would just say overall make money on. Commercial auto is the one that is the most expensive, the most volatile, and the hardest to find profitability in. And again, when I say commercial auto, I'm saying truck goes down the road, gets into an accident, injures somebody or damages their property. What do those settlements look like, right? So when insurance companies are trying to assess that, I mean, it's hard because if you think about the average trucking company out there, I don't know the stats on how many trucks the average trucking company has, but let's say you're operating a fleet with 10 trucks, right? Well, your data and your propensity to a loss is not really credible. It's hard to predict from year to year. Are you going to have one claim? Are you going to have two claims? Are you going to have $1 million claim? Are you going to have no claims? So the insurance company can't look at your individual data to figure out how should we price this, right? What should we charge you? So then where they lean on is all of their, actuarial data and their different points to say, where are you located? What's your radius of operation? What's the quality of your driver pool that you have? How long have you been in business? What type of routes are you running? How consistent are those routes? There's a whole litany of data that they put into the rating model to try to come up with sort of the base rates, right? And then they're going to credit or debit that rate based on, the individual performance of your account, over a 5-year look back. The larger you get, the more credible your data becomes. So then they can price you a little bit more in line with your actual losses. But there's a whole litany of, items like that go on behind the scenes. And then every year, the insurance companies are really not just analyzing the profitability of, ABC Trucking on an individual basis, but their entire book of business. And what we've seen in commercial auto is we're now going on 55 consecutive quarters of rate increases. So what that means is that these insurance companies on commercial auto are just struggling to find a way to price it appropriately to make money.
Yeah.
So that's led to them having to raise rates over 55 consecutive quarters. And probably the number one metric that insurance companies measure as far as profitability is their combined ratio. So what did we collect in premium versus what did we pay out in claims plus overhead expenses? So if you have a 100% combined ratio, that's break even, right? Well, the industry in 2024 operated right around 112% combined ratio in commercial auto, with some insurance companies exceeding 140, 150. So what that's telling you is they're not making money on it. And although you may not be having any claims as an individual trucking company, well, the rest of the portfolio is,
Right.
and therefore they're needing to raise everybody's rates to help offset that. And that's what we call this dilemma that these fleets find themselves in.
What are the main factors that go into it? You mentioned a couple of them as far as like the routes, the consistency of the business, how long they've been in business. I'm sure FMCSA data also comes into play too, right?
Yeah, FMCSA data, which, there's a lot of different, camps of, thought on, how much that actually dictates or ties into, the
Right.
Accident propensity of a trucking company. But it's the CSA data. The claims history definitely, leads the day at the end of it. That's probably the biggest component. Driver pool is one of the biggest things too. What are the actual, what are your driver hiring standards? Do you stick to them, right? Because what most of these insurance companies would tell you is that in the event of a bad accident, the defendability of a driver and how well they can go defend that driver is going to be the catalyst in how, what the outcome of that claim looks like. So they put a lot of emphasis on that, just age of the equipment, overall operations. But we sort of joke, every insurance company just has something different that makes them tick, right? And there's not a lot of consistency from insurance company to insurance company there.
Sure.
This Week in History.
This Week in History takes us back to October 27, 1864, when Jack Mack was born on the family farm near Mount Cobb, Pennsylvania. As Jack was the most mechanically adept of 5 brothers, he left the farm and went to work for the railroad at the age of 14. Jack's technical expertise ensured rapid promotion to the position of engineer. Jack later moved to New York City, where he held the supervisor of machinery position on the Croton Aqueduct. Later, he served as second engineer aboard a ship traveling between the United States and the Caribbean. In 1890, Jack returned to New York City and found work at the highly regarded Brooklyn Carriage and Wagon Factory of Fallison and Berry with younger brother Gus. Jack's mechanical interest led to his greater involvement in wagon production. When Christian Fallison decided to retire in 1893, both Jack and Gus decided to buy the business. Jack took charge of production, and Gus became the office manager and sales department head. On July 26, 1901, the Mack Brothers incorporated and became the Mack Brothers Company. In 1903, Mack produced its first gasoline-powered vehicle. The Manhattan was a 15-passenger touring bus, which was powered by a 4-cylinder engine and traveled at an average speed of 12 miles per hour. In 1905, the business moved to Allentown, Pennsylvania, and by 1911, Mack Trucks was one of the largest producers of heavy-duty trucks. Seeking additional funding for expansion, Mack Trucks merged with Sauer Motor Company and operated independently under the name International Motor Car Company. After the sale of his company, Jack became involved in California real estate, became a dealer for the Republic Truck Line, and served as a highly sought-after truck consultant. In March 1924, Jack was killed in a car crash. This innovative engineer created a company that has defined his legacy and today promises our customers a legacy of success.
This has been This Week in History.
We are here with Jared Sweeney, Vice President, Transportation Group with Cottingham and Butler, and we're talking about insurance and the different things that go into it. Let's shift a bit and talk about the trucker side of things, be it highway transportation, be it vocational, where they're on a site, transporting on the roads, going to a landfill, whatever it might be.
Yeah.
So these companies, they're doing the best they can delivering their services, and they're experiencing increased rates.
Yeah.
a lot of times beyond their control. What things can they control that might help influence the outcome?
I would say that the things that they can control is like everything, having a proactive mindset and top-down leadership. So I think the fleets that you see that do this, the best, and I'm thinking of one trucking company in particular that I just have the utmost respect for how they operate. The safety and the priority they put around safety isn't just a hired safety director that they have in that role. It really starts with owners all the way down, and how involved those owners are in the day-to-day of just interacting with the drivers and interacting with the dispatchers and all the different levels within the organization. They just create this culture where this is a non-negotiable for us, and this isn't something we're going to cut corners on, and we are going to all work together and make it a uniform effort to have safety be the number one priority. And when you start with that, then it just trickles into every other component of your business. It goes into how you maintain the fleet and what the expectations are that, hey, we're not going to have, crappy equipment running down the road. We're going to make sure we're maintaining this. And then what you find is when you have that within the trucking company, then they typically have pretty good, CSA scores, or federal scores. They have pretty good, loss history, and then they're probably the ones getting the better rates, right? So it's hard to bucket into one particular thing, but it's really just at the end of the day, it's caring and having the discipline to put that as a priority. The thorn in my side that I see, and then probably a typical example is, hey, you're meeting with a trucking company, and they're working as hard as they can to control, everything that they can from a safety perspective, right? And then they're invested in technology. They're doing what they can to reduce accidents, hire the right drivers, invest in personnel across their organization to take on some of those roles. But yet they keep seeing rate increases every year. And then the comment from them is, well, it doesn't really seem to matter what I do or how profitable, quote unquote, that I am to the insurance company. My rates continue to go up, right? And it gets back to that, what we sort of call that standard market dilemma that we spoke about earlier, is that it's not just being underwritten on you as an individual. They're looking at the performance of their overall portfolio, right? And then unfortunately, one end of the spectrum that's having a bunch of accidents and losing the insurance company money is ultimately being offset or subsidized by those on the other side that aren't having any accidents.
Right.
So what trucking companies struggle with is that there's just really only so much that they can do, and then there's all these factors outside of their control that we spoke on earlier. So it does get frustrating, and that's really where trucking companies, they're looking for really good ideas, expertise, and creative ways to manage that in a world where they don't really feel they got any control over it.
What are some of these creative ways? Clearly, you can go to a broker, direct to an insurance company. There are many different ways to go buy insurance, right?
Yeah.
What are some of the creative ways that companies might be able to explore to still have coverage, obviously, and maybe have more control over that outcome?
Yeah, that's a good question. The biggest thing that, again, it sort of becomes a little bit of a running joke, but we try to help trucking companies buy less insurance. I mean, that's the number one goal, right? And I say that because, those that are investing heavily in the safety and technology and are having better than average claims outcome, you might as well take on a little bit of that risk yourself. So instead of buying insurance for everything, just buy insurance for only the portion that you don't want to take on, right? The more catastrophic claims, the stuff of high dollar value, and then cash flow the rest of the stuff that's a little bit more predictable and frequent based. So the number one tool to do that, especially for the mid-sized fleets, are what we call group captive programs. Group captives have been around in a lot of different industries for a very long time. Cottingham and Butler started the first ever group captive program for transportation in 1993. It was called Traffic Insurance Limited. And then fast forward to today, we've got 8 different trucking captives that service fleets of different shapes and sizes, sort of running in different niches, but we're, nobody else in the industry does more captive insurance business than what Cottingham and Butler does. And in a nutshell, what a captive insurance program is it's an insurance company meant to insure the policyholders. So trucking companies are going into business together. They're buying ownership into this insurance company that Cottingham and Butler and other partners help to form, and then they're paying their premium in, but a portion of that premium is being set aside to go pay for their claims if and when they happen. The other portion of the premium is going to pay the overhead expenses that are associated with running an insurance company. And then at the end of the day, if the trucking company doesn't use what they set aside in their loss fund, we call it their loss kitty, then that gets returned back to them down the road in the form of a dividend. So they're only buying insurance for more catastrophic claims above a certain level, and then they're just pre-funding or setting aside money to go pay for their own individual claims. Does that make sense?
Yeah, it does. Kind of a similar thing, but different is just the amount of deductible you're willing to carry.
Sure.
Right? When you're thinking about just health insurance, for example, different topic altogether, but something I have more experience in than the trucking side.
Yeah.
But that said, if you want $1 million of coverage and your deductible is $0, you're going to be paying a lot more for that claim or that policy. However, if your deductible is now $10,000, where they don't have the exposure to cover smaller things, well, your rate's going to be less because it's a little bit more catastrophic. So
Exactly.
Same kind of thing as far as where does the risk fall?
That's exactly it, and that's where the captives are really a great solution for the mid-sized fleets, because the larger carriers have the luxury of just that. They're taking on large deductibles, large retention, so they don't have the need to buy as much insurance, so their fixed costs and what they're paying in premium is substantially lower. Well, if you're a trucking company operating 50 trucks, you don't have the luxury to go take on the first $250,000, $300,000 of every claim, right? You just can't cash flow that in the event that one of those accidents happens. So what the captive does is, instead of you taking on that large deductible yourself, you're working with the group to take on that first, $300,000, $400,000, $500,000 of every claim, and then you're only buying insurance for once it gets above that preset amount.
Yeah.
If that makes sense.
So it's almost like a smaller insurance company within an insurance company.
Exactly.
Right? You're just kind of pooling resources to help mitigate your exposure.
No, you're exactly right. And what it does, it creates a lot of stability, because when we're out trying to find trucking companies that are, that would make a good fit for one of these captives, they're really hard to get into.
Yeah.
Because what we talked about, what's going on in the conventional insurance marketplace, and these insurance companies are struggling to make money. Well, we don't want to go start a captive that's, repeating the same lackluster results, right? So we want to outpace that. So what we're trying to do is go capture the best of the best trucking companies with the best dedication to safety that are going to outperform their peers. And then if we can, for a lack of a better term, cherry pick the best of the best, put them into this incubator, this insurance company of their own, well, they're just inherently going to get better results than what is going on in the rest of the marketplace. What that does is it stabilizes pricing, and it gives the ability to turn that insurance policy that they have to buy into somewhat of a profit center where they can get a portion of that premium back in dividends.
Yeah. Let's kind of flip the script a little bit. You were talking about a company that has safety from the top down. It's built into their culture. They're doing the right things, whether with captive or direct or through a broker. And they're still somewhat of a victim of the industry trends over the last, let's call it 55 months or whatever it happens to be. What do the bad companies do, or what don't they do that creates a bad environment and affects the insurance world negatively?
Yeah. And you see a lot of it, right? And I think that's where the frustration lies. You talk to trucking companies, you attend a lot of these trade association events, is, there's such a delta between the trucking companies that are so focused on doing the right things that they get frustrated that there's a lot of, trucks on the road and motor carriers out there that just don't have that same dedication to it, right?
Right.
And unfortunately, it's not something that, this old adage, you can lead a horse to water, but you can't make him drink. And there's just some trucking companies out there that they're just sort of content with the lane that they run in, no pun intended. They don't really have much of a desire to fix things, no matter how much you try to offer value-added resources from a safety perspective, claims management. And proportionally, they just, pay more for their insurance and probably a lot more for other expenses than what, the trucking companies that are, focusing on safety do. So I don't know if that really answers the question. It's a challenge, and I think with how difficult this commercial auto marketplace has gotten and how hard it is for these insurance companies to make money on it, quite frankly, it's divided even more of a wedge between the good companies and the ones that, maybe have, safety and compliance and claims issues. And those ones with the issues, there's a lot of them out there that are, trying to right the ship and do things to correct it, but it just gets really challenging for them to even find insurance.
What does a company do when that's the case? I mean, let's say, they're involved in something with a big claim, maybe a lawsuit and huge exposure, and they're doing what they can to be safe, continue their business, employ their drivers, make customers happy, and all of a sudden their rates get really high. And what options do they have?
I mean, unfortunately, you can, if you read a lot of the headlines, I mean, it does drive trucking companies out of business because they get to the point where they can't operate without the insurance, and it gets so unaffordable that, they're not just going to go haul freight just to go break even and, and lose money on a, per trip basis. So it does drive some amount of business. Other trucking companies are forced to go take on really large deductibles or retentions just to mitigate the cost, right? They don't really have maybe the desire to take on as large of a deductible, but they don't have an option. There's a market out there of insurance companies that, they're very vocal that they don't want to go compete with the best of the best rates or the the more preferred rates. Like they want to step in and write the trucking companies that they're going to be able to get a higher premium for a potentially quote unquote higher risk. So there's a subset of insurance companies that do, I guess, play ball in that arena.
Yeah.
But it gets very it gets hard to manage the cost, is what I'll say.
Sure. So I heard a statistic that 75% of the crashes on the road between a truck and a passenger vehicle is at fault of the passenger vehicle. But still, the trucking company has some exposure there. And what exposure they may have is exponential. I think that a lot of these claims and verdicts are really hampering the affordability of insurance.
Yeah, no, I'm glad you brought that up, and we could honestly probably do 3 podcasts just talking about this topic as a whole. But it's a problem, and every state and federal, trucking association is trying to find ways to go, advocate with their local, legislators and lawmakers to try to create some reform around this, right? Because, just a couple stats that'll sort of bring this full circle. So Cottingham and Butler, just to backtrack for a second, we have Cottingham and Butler Claim Service, which is a third-party administrator that handles claims on behalf of a lot of insurance companies, captive insurance companies, and large self-insured companies out there. So with that, we've got access to a lot of data because there's a lot of claims that flow through the door to be able to look at what have claim trends done over the last, 5, 6, 7, 8 years. And it's pretty astonishing. It's what some of the data that we've captured with this is from 2018 to 2024, the average bodily injury claim. So not talking property damage when you injure or you damage a vehicle, but just if there's an injury claim made, the average claim is up almost 70% from what they were settling for in 2018 versus 2024. In that same time frame, frequency of claims across our data is down 10%. So trucking companies are investing more heavily in technology. There's overall it increased, I think, just awareness to the safety culture and the reduction of accidents across the industry. But yet, when you are having a claim, the costs are up 70%. And you can speak to a lot of different reasons for that, right? Everybody's got different opinions, but I mean, we see it every single day. It's not so much the nuclear verdicts. They gather the headlines. They're what everybody talks about, but they make up less than a fraction of 1% of every auto accident out there. What it is it's the claim that there's a minor rear end injury in a major metro area that you used to be able to settle for $15,000 and make whole, the claimant involved in that. Well, now that claim, instead of settling for 15, is settling for $125,000, right? So it's that death by 1,000 cuts where insurance companies are saying, I'm having a hard time figuring out how we go, price an account appropriately, knowing that we go get into a minor accident and we don't know if it's going to be $10,000 or it's going to be, $500,000. And unfortunately, what you see a lot of that is it's largely jurisdiction based, I guess, for lack of a better term, meaning that, there's certain states that are more favorable. They're more favorable to the trucking company and to the business. There's others that are just very favorable to the claimant. So every year there's a list of, the top 10 jurisdictional hellholes, as they call it, where it's just different metro areas and states across the country that are just have a higher propensity to having a really bad claim or a, nuclear verdict. Yeah. And what you're finding is that the driver of a lot of this is just the increase in litigation. And I, don't have any data to really back it up. But I just even in the 9 years that I've been doing this, the frequency today of a trucking company getting into an accident, no matter how minor, and having a plaintiff's attorney involved in that case is astronomically higher than what it was even 5 years ago. And the minute that those claims continue to get litigated, it's just no holds bar as far as what this is ultimately going to go for.
Good thing we have cameras now.
Yeah.
For a large answer. What happened? You've got one side, the other, and then the truth.
Yeah.
And the cameras can really help trucking companies go through the process. Who's really at fault, what really happened, and things like that. Not everybody wants to have a camera, both in the cab as well as facing out, but to a large degree, that can help answer the questions and maybe make sense of it.
Yeah, no, you're absolutely right. And there has not been a greater piece of technology introduced to the transportation space to help mitigate accidents and, to your point, tell the truth than what the cameras have. Gosh, probably a year or two into my career was when the electronic log mandate came out, right? And the sky was going to fall with that and it was going to be the end of the world. And then fleets evolved to it, and today it's mandated, right? It's been for a long time. Cameras were met with a lot of resistance even early on in my career, and a lot of trucking companies thought their drivers were going to quit if they had to put them into the cab and everything else. Now it's become such a mainstay in the industry that, virtually everybody is operating cameras in some capacity. But as far as the ability to mitigate claims, know which ones, hey, we've got to go settle this one because we were at fault, or hey, this is one worth fighting. To your point, they tell the truth, and there's not a single greater piece of technology out there to do that.
And that goes to your statement about culture of safety. If you have that culture in your company, going from the top all the way down to the driver's going to say, perfect, I'm a pro.
Yeah.
I'm going to go from A to B safely. Cameras are welcome because I want to be able to defend myself as well for all of the right reasons.
Yeah,
so kind of a shift in perspective of I have something to hide versus I have something to prove.
Yeah, I think you hit the nail on the head. And your stat earlier, which I've heard the same one reference, that 75% of the accidents out there are not involving the trucking company. I mean, truck drivers are a professional job, right? And the lion's share of them, I'll take that very, very seriously, and they're doing everything that they can to, stay clear from having those accidents. So having that camera to go defend them when that happens is, equally as important.
Yeah. What other things should we talk about?
Well, there's a lot of topics. I think we covered it. When I take a step back, when I'd said earlier that I got into this this role, trying to find ways to do my part in a little cog to help make the insurance buying process easier, right? What's really been brought to the foresight for me is just, again, these trucking companies have a lot of challenges on a day-to-day basis. It's not just insurance related; it's compliance, it's the drivers, right? And it's a very challenging industry. And right now, if you talk to any trucking company business owner, there's not a lot of them having a lot of fun right now because trucking has been in a really recessionary period for going on 2.5 years now. So I think it's, when you're on the road, when you're, going by a truck, everybody sort of jokes with it, just have some respect for it, right? Because you never have most people just don't have any clue of how hard it is just to operate that business and just keep that truck moving down the road. And those professional drivers, seating in that truck and trying to make their livelihood out of it. When you're just involved in it every day, you just get to see it and you just have a lot greater appreciation for it.
Well, yeah, the topic continues to come up pretty much every podcast. We take for granted all of the things that go behind the click to when you receive your product. And there's so much that goes on, kind of like what you shared about the insurance side. You have a premium, there are all these things, but there's so much behind the scenes that go into it. Well, the trucking industry drives our economy, and it's so vital. And I think there needs to be a level of respect, like you were talking about, better education in the driving, not just for the truck side, but the passenger vehicle side. They have no idea how heavy these trucks are.
Yeah.
They see it when they go up a hill, fully loaded, right?
Yep.
They slow down in one of the two lanes, but they don't quite understand as far as maneuverability and safety. And that inherently turns back to insurance.
It does, yeah. And it's a hard job. It takes a very, certain kind of person to, operate a truck and run a trucking company. And you just have to have respect for it because without them, there's not much of an economy here.
You're absolutely right. Well, how can people find you and Cottingham and Butler?
Yeah, so Google, LinkedIn, Cottingham and Butler. We've got a lot of resources. I mean, we write truck insurance. We always joke from Alaska to Maine and everywhere in between. So we've got probably 65 different agents like myself that work in different fleet size segments in the lower 48 states. So just reaching out to Cottingham and Butler direct, you'll get pushed in the right direction of somebody that can help. Whether you're trucking company, big or small, we've got solutions to accommodate about anybody.
Thanks for your time today.
I appreciate it. Thank you for having me.
Thank you for tuning into Beyond the Bulldog with Jared Sweeney, Vice President, Transportation Group with Cottingham and Butler. Our podcast is centered around providing stories and content that keep you entertained and informed. Let us know what you think about this week's podcast and share ideas about what you want to hear and who you think would be a great guest. Please leave your suggestions in the comments section below.
Thanks for listening. Don't forget to like and subscribe and make sure to follow the Bulldog.